Hopefully it will cross. Okay, now it's crossed. All right. Morning, guys. Sorry about the technical difficulties here. Um, what means dropping? Can see it on his screen. Okay, sorry. We're going to get going now. All right. Guys. Okay. U.S. markets up for the fifth consecutive night last night. Kind of a reasonable move across the board out of the financials. I think we had one financial that was down on the day, but I mean it's they definitely led the rally last night. We haven't really seen a big up move since we kind of broke to new highs, but we've just kind of been steadily drifting. All the risk assets and things like that are really starting to look good. All the risk currencies, things of that nature. So we're gonna keep our eye closely on that. We're going to jump in. If you look here at the Asian markets, you can see Japan was flying again on the back of the weaker yen. The yen's really made a breakout here. China was a bit of a lagger, but they had some really confusing data out there. We'll go over that in a second, but some data that didn't really make sense. So China's really lagging a little bit there, but other than that, Asia was quite strong across the board. We'll look here on corporate action today. There's very little. The one thing is there's a lot of stocks going that are last day to trade today. They're going to ex-div on Monday. We've got BTI. That's a big div because that's over £1. We've got Kumba at 12 Rand 50, another big div there. ShopRite 1 Rand 23, Anglo Gold 50 cents, and Trueworth is a reasonably big div as well, over 2 Rand. So watch those today. I mean, there could be some chasing into some of those stocks on the day today. We had a lot of data out of the east today. Like I said, the Chinese numbers were confusing to me. We had a big export beat and a import miss, which I think is kind of telling in terms of what's going on in China. You can see that globally things are doing all right, but maybe China is not doing doing amazingly well. But how the trade balance would have been so high, I don't really understand. So, but bottom line, I think it's it's reassuring that the export numbers out of China are so good. Later on, we've got industrial output out of Spain. We've got industrial production out of Germany. And then the big number on the day is the non-farm payroll number out of the States. I really think that this is, it's key. We've seen a lot of good data coming out recently in the States, and if we get a big number today, it'll probably take us, I would assume that it'll take us to all-time highs or very close to all-time highs in the S&P as well as the Dow. So we're going to watch that closely this afternoon. All right, let's have a look at the maps. Okay, the first one I wanted to look at is the dollar rand here. If you look at the dollar rand, yesterday? I mean, we've been talking about this. We've been talking about this level at 812 for the last few days. Really significant level as we've managed to get through it. You saw yesterday we really ripped hard through that 812 level, and 912. And what we're going to look at here is sort of this range that we broke out from, which is 880, which we know 880 was the major level. That was the bottom end of this range, and then the top end of the range was at 912. So we're going to look at that. Let me just bring this over a little bit. We're gonna look at that and project maybe the same sort of move to the upside here, which would put us all the way at around 944. I believe, which is a hell of a long way away from here in the rand. So I wouldn't be surprised to see us get there in the rand. We've seen this pattern here quite a lot lately in a lot of the different stocks. I think one or two of them we're going to look at in a little bit are like that. So just keep an eye on the rand. We could really get a lot of support for some of the locals on the back of that weak rand. Also want to show the yen here. The yen, like we talked about, is our one of the big risk barometers we're paying a lot of attention to at the moment. We really snapped out of this yesterday above the 94 and a half level, and you can see we're moving higher there. Also a long ways that we can move here on this, not a long ways, but about 2.5 cents or close to 2.5% on that move that I think could still be left here. Could set us a target up around 96.50 or sorry, around 97 on the yen. So watch that one. That's been a really good risk barometer. It's been really telling to follow that in terms of where the market's going to go on the back of it lately. All right, MTN, we also, we looked at this one yesterday. I'll shorten it up a little bit so we can see it a bit better. We did get the close below 75, below 76, which is what we were looking for. You can see there we closed below that support line. Not a really definitive close in my mind, but a close below there nonetheless. I think it's really important to watch it today. See how watch it closely. See if we can keep below it. As long as we can kind of keep below it today, I think that we will trade down to this 70 level in MTN, which is a really big support in the interim. The one thing that was disappointing yesterday on MTN was that I guess it kind of did what we expected it to in a second day play. Maybe not as hard of a sell-off as we wanted to, but there was just very little volume behind it. So I think that's what we're going to want to watch for. If we can't really get any volume in, I'm not really sure that move's going to materialize. If we look at, this is CFR here. CFR, we had this level that we talked about when we had the big sell-off a week and a half, 2 weeks ago, 68.80 or 69. We really put in a real flag pattern here in CFR. That we've broken out of a couple days ago. We came down and tested on support yesterday around $72 or 72.5, and we're pushing higher. I don't see any reason why CFR can't trade to recent highs, which are just north of 76. So watch that one closely today as well. All right, Tiger Brands. Tiger Brands has gotten below this little consolidation range that we've seen recently. That's an awful line that I just drew there, but right around 310, a little bit north of 310. So we've kind of broken out from this little consolidation that we've seen in Tiger Brands. There's not a whole lot above it. I would say if there's any resistance here, maybe around 319, 320, you could see a little bit. But as long as we can stay above 310, I think you're going to be wanting to own Tiger Brands in the short term. Okay, this is a real similar pattern to what we saw a second ago when we were looking at the ZAR and a lot of these other stocks we've been looking at. I think breweries made a move like this, Naspers has made a move like this, and we've just seen we've seen Sanlam move above this 47.50, 47.60 level yesterday on the back of earnings. Well, it kind of closed right at the day before, and then yesterday we had a big spike on earnings, paying the once-off div, etc. I would watch this level really closely at 47. Let's call it 47.50. If we can't get below 47.50, then you're wanting to own this thing. But watch it around that level. It's going to be our the line in the sand for us if you're wanting to play on the long side. If it gets below, then obviously you could probably short it. But for now, I think we've got to play the bullish side. All right. Woolworths, we broke out yesterday as well above that little the recent range since the initial breakdown. In Woolies, I don't see any reason why we wouldn't be able to get up here and kind of test those highs previously in Woolies, which would be up kind of around $72. I mean, this thing's already paid its divvy. It's only a couple bucks away, so maybe 3% away from previous highs, and I think that it's obviously been the outperformer in the sector relative to virtually anything. So watch that one over the next few days. And then the last one I want to show here is Vodacom. Obviously, it's amazing that these things broke out, and then we had one big day of pullback, and then I think the next, 2 days ago was MTN's earnings. We'd gone over this chart, several times. That is not the right level I'm drawing there. Around 116, I think, is right there. And that 116 was really has been support. We gave it up for a little bit. We've managed to get back above it. That's really a really defined level for Vodacom. We're going to want to watch that really closely. If we can get below 116, I really think that this target could be in range, especially how it's really traded very disappointing over the last few days, and it's actually, I think, sold off more than MTN has after earnings. So 116 is going to be our risk line for Vodacom. If we get below it, I think you can play the short side. But if we hold at 116, obviously, we're going to want to be on the long side. So, all right, and that's it for today, guys. Thanks a lot.
Do you think this is some kind of fucking hobby that you can come in whenever you want?
Steph, you're looking strong like an ox, mate.
Billy, what's the story? You punished the whole day yesterday.
Yeah?